Hey everyone, welcome back. Ready for another deep dive?
Definitely.
So it's this English learning podcast called Daily Money Briefing.
Huh. Interesting. Okay.
It's actually pretty cool. You get the
Yeah.
financial news and kind of a language lesson all in one.
Oh, I like that. Sort of killing two birds with one stone.
Exactly.
Today, we're really digging into some powerful forces reshaping things. Not just global trade, but also seeing how countries like South Korea are dealing with it all, right down to, corporate changes and even family finances. Our goal here is pretty simple. Give you a clear shortcut to understanding how all these pieces connect, what's happening, and maybe what it actually means. So let's start with those global trade shifts. Specifically, the uncertainty. It seems to be constantly coming from President Trump's tariff announcements lately. Our sources show this pattern of really mixed signals, especially with potential retaliatory tariffs maybe coming soon.
Yeah, and what's really fascinating, I think, isn't just the tariffs themselves. It's more the way these negotiations are happening now. We see these demands like 25%, 35%, 50%, or maybe just 10%, even saying things like the end of trade negotiations. It's it feels less like policy and more like a strategy to keep everyone guessing.
That's a really sharp point, keeping people off balance. And then, almost immediately after, suggesting delays might still happen for those same tariffs. It just makes you think, how can businesses possibly plan around that kind of, well, volatility?
They really can't, not for the long term.
And remember that comment about Korean and Japanese car makers? Concerns they might benefit from lower tariffs. The response was basically that U.S. automakers are too busy selling cars in the U.S. and insisting, quote, no way foreign rivals would pay less. It's quite something.
It just feeds into that environment where agility, reacting fast, becomes more important than, say, stable long-term strategy. This constant back and forth, like our analysis shows, it really changes how markets have to think and react.
And that global uncertainty, it doesn't just stay out there, does it? It kind of forces countries like South Korea to look inwards, too. Which leads us straight to these big corporate law reforms they're pushing. The Democratic Party is moving ahead with this stronger commercial law reform, even though the business community seems pretty resistant.
Well, what the material suggests is this new proposal. It's actually tougher than the one vetoed back in April. The key changes are pretty significant.
Okay, break those down for us.
Sure. So first, they're limiting the voting rights of major shareholders and anyone related to them to just 3% when it comes to electing audit committee members. Second, strengthening something called cumulative voting. And third, separating the election of those audit committee members completely.
Okay, cumulative voting, just so we're clear, that's where if you own, say, 10 shares and there are 3 positions, you get 30 votes you can put all in one candidate, give smaller shareholders a bigger punch, right?
Exactly. That's the idea. Boost minority shareholder power, increase transparency. That's the stated goal. But the pushback, the fear for the corporate side, according to our sources.
Well, the leaders are warning about getting tied up in lawsuits, basically, excessive litigation, and that it could really hurt their competitiveness overall. It's a major shakeup, potentially changing how those big family-run conglomerates, the K-ball, operate.
It really is.
And while all that's happening in the boardrooms, you also see changes hitting people much more directly, like in the housing market. We're seeing Korean banks raising mortgage rates, starting just this July, makes borrowing harder.
Yeah, this comes right after the government's June 27th measures. Those capped mortgage amounts in the Seoul area, the capital region, at 600 million won. And we have specific examples. Worry Bank hiked its 5-year adjustable rates by 0.06 points. The new range is like 3.57% to 4.77%. And Hana Bank raised rates on refinancing loans too.
So think about maybe a young professional in Seoul. Costs are already high. This is another hurdle, isn't it? Stricter loan caps and rising interest rates. It's a real double whammy if you're trying to buy a home there.
Definitely makes it tougher. And if you sort of zoom out and connect these different dots, the global trade talks, the corporate governance fights, the local housing market squeeze, they might seem separate, but you can see they're all part of this bigger shifting economic picture, right? They're either responses to change or they're causing more change themselves.
So tying it all together for you listening, what does this mix mean? These interconnected shifts, trade tensions, corporate rules changing, housing becoming less affordable, they all point to a period of, well, significant adjustment.
Maybe the final thought to leave you with is this. How might these pressures, both the global ones and the internal Korean ones, force not just big economic shifts, but also maybe a rethink of how individuals like you approach financial decisions and risk in the months ahead?
Thanks for diving deep with us today.